Hey folks, and welcome to the Pipnotic Symposium on the 8th of May 2024. I hope you're all doing well. I spent the day with a really good friend of mine, a guy who is a fascinating individual. As a matter of fact, he started out his career as a photocopy boy for Goldman Sachs in London many years ago. And it's kind of funny how some people start out, and he slowly worked his way up and became one of the big traders at Deutsche Bank and some other big financial institutions, and he has this innate ability to calculate risk no matter what you're talking about, which is kind of funny. So we had a very funny lunch, and we talked about trading, and I showed him my algos and especially ASR, and we spent a lot of time talking about it. And as I was speaking to him about it and trying to explain how it works, I had a few realizations that I thought were really powerful, and I wanted to share those with you just now, because I think that for the version that I'm currently working on, which is 1.085, I think that we can look forward to finally a version of the robot that will run very likely in 100% fully automated trading configuration. And this excites me more than any of you could imagine. I mean, I've been trying to do this now for many years, and just looking at my SVN check-ins and pulls and whatnot, I can see that I have well over 1,000 versions of this algorithm since its inception. Gosh, when was that? I think in about 2015 or 16. So it's super exciting. And so I just wanted to talk a little bit about that, because I think that once we talk a little bit about how this new version works, how it's combining the two time frames, I think this will give a lot of clarity as to why this version in particular has a very good chance of succeeding like none of the others. Okay, so I mean, if we look at this example, this is the Aussie Canadian dollar. This is the 1 hour, the 4 hour, and here we have the daily. And notice how on all of these time frames, besides the hourly, you can see the prices are very extended higher. We're poking up into some sell zones, some liquidity, some historical highs on the daily. The histogram has just poked above the green line. On 4 hour, we poked above the green line a little while ago, and on the hourly, we've done that quite a few hours ago, maybe a couple of days ago. And so, I mean, by combining the histogram, or the entries that are based on the histogram, on more than one time frame, we are able to avoid situations where, let me see if I can find an example. I'm just going to mute and find a really good example that expresses what I'm trying to say. Okay, we'll try this. So this is the American dollar against the Canadian dollar, and notice here that the histogram on the hourly chart is pretty high. We're very positive relative to the historical readings on the histogram. But what now if the price of the American dollar versus the Canadian dollar, let me do this. What if it does something like this? What if it continues to go like that? Which is very plausible. Prices continue to wriggle up like that. Well, this is going to continue to go up, and then eventually it'll start to go like that and turn flat. But the whole time, I mean, we're probably above this line, the signal line here. And so when it starts to turn down, maybe around here, and this is just a hypothetical example, when we start to go negative, or we start to show smaller values relative to historical values, maybe it would have sold here, but the price of the asset continues to wriggle higher. Okay, and so the whole madness behind wanting to combine two time frames is that even though the hourly is saying sell, the 4 hour has not yet passed that. So as this continues to climb, which is very likely, probably up to here, the histogram on the 4 hour will continue to expand, and eventually it'll poke through these lines, and this is where we will get the signal, which on the hourly chart will likely be much further along. So maybe if we just keep going like this, go like that, maybe it's all the way over here, all the way over here. But this is where the 4-hour manages to poke above the signal line. And so even though we were positive and we had a sell signal on the hourly chart, the 4-hour said, not yet, wait. And we finally pierce it. And then the robot says, good, now we have reached the end of the cycle on these 2 time frames, which I talked about this yesterday, which looks like this. So now, not only we saying sell on the 1 hour, we're also saying sell on the 4 hour. And the likelihood then of prices going like this are much greater than not, which I think is really, really fascinating. So this is the whole idea in combining the histogram on more than one time frame, in this case 2. You could also go one step further and say, well, I want to see alignment in more than that. I want to see on the daily as well. But the problem, I think, in doing that is that the daily is so much slower than the hourly and the 4-hour that I think that we would essentially see very few trades, because it can take days, weeks, sometimes even months for the histogram to reach a point in price where it's time for the daily to turn around. I mean, there are many days between this one and this one here. And sometimes, if you consider when we have this example here, so you see that this one is above the sell, it's in the sell zone, but maybe up here we would have poked above and we were also ready to go, but maybe on the hourly we were already below the sell zone. Maybe we're operating down here. Let's say, I'm just going to draw the histogram. Maybe we were above and we started to move down. And so when the daily said sell and the 4-hour said sell, the hourly said we've already moved. And so no trade. Okay, so you have to be careful in trying to look at too much data for confirmation. You have to look at enough data that makes sense, but you can't look at too much data. Okay, and also the difference between the 4-hour chart and the daily chart, I mean, the daily chart is 6 times greater than the 4-hour chart. That equals the daily. Okay, but the difference between the 1 hour and the 4-hour, you have 1 hour times 4. That equals the 4-hour chart. Okay, and so these two are much closer in time than these two, which will result in the algo, which will result in the 2 histograms, the 1 hour and the 4-hour, synchronizing quicker and more efficiently than the 4-hour and the daily. Okay, and if you looked at the half an hour and the 1 hour, well, then they're too close together, because you have 30 minutes here times 2 equals the 1 hour. So they're too close. And the same for the 15-minute times 2 equals a 30-minute chart. Okay, and so these are also, I think, too close. There's not enough difference between the two. And so the sweet spot from my perspective is the 1 hour and the 4-hour, because here we are seeing 4 times the 1 hour equal, 4 times the 1 hour equals the 4-hour. And I think this, in time, based on what I have seen historically and based on many observations, this just makes much better sense. So with that, I can draw a smiley face. And I think that this is where we are currently, and I'm super excited. Okay, and so we talked about these already yesterday. We had 1, 2, 3, 4, 5 winners and 1 break even. So we have the break even stops working beautifully, and the way we operate with break even stops is that we have, let's say that we get in here. Okay, this is the target and this is the stop. When price moves 80% towards the target, then the stop is moved to break even. Okay, so if we come back and we get stopped out, we lose nothing. Okay, so this is fine. So we get a free look at the trade. You can configure this to whatever you want. There's also the option to say, as a matter of fact, when we get 80% towards the target, I want to take half of the trade off. We can also do that. It also does that. Okay, so when we get, so stop, entry, target, when we get 80%, which is about here, maybe around, right around here, we take 50% of the position off, or 80, or whatever you set it to, and the stop is moved to break even. We also have that option. But I don't do that. I like to leave it all open. I'd rather do an all or nothing. But these are just some of the features that we're looking at in the new ASR. I'm really excited, as you can probably all tell. Anyway, I just want to leave it at that. I just want to kind of share a little bit about the difference between 1.084, which is the existing version, with the 1.085. The 1.085 is the one I'm probably going to release towards the end of the week, so everyone will have access to that, and then you'll be using the exact same algo that we have here. And this I have running on a prop trading account, and it's doing really well. We have many others doing that. As a matter of fact, I'm in the process of trying to find some money that we can pull together, and so we can build up like a really nice size account with some friends, and we can let it run in like a PAMM constellation or something like that. So it's super exciting. But I'll leave you all to that. If you have any questions, please do let me know, and happy trading, and be very careful. Thanks for watching.